Hi, I will show you in this video how I am personally using our awesome Aufi alerts. Disclaimer: I am just providing you my own best practices, which has helped me very effectively using these alerts. In no uncertain terms, this is the only or perfect way to use these, and we do not benefit from your gains and/or are not responsible for your losses. First and foremost, let's understand the setup. For those subscribed, please request us access to this bot. This TradingView bot comes complimentary with our monthly alert subscriptions. One can use it to trade intraday, swings and/or even long-term positions based on the time frame, and are bought by sell alerts. Once you have access, go to invite-only scripts and add both 30-minute and 60-minute bots. Please change candle type to HA. Don't use regular candles. You can add moving average on your chart. I use this one in my decision-making. Add EMA color change indicator with 18 period. Available for free in TradingView. You can add a Chimoku clouds if you would like. I don't use these cloud for my decision making. We publish our alerts in Discord and channel named Aufi Alerts. Currently, these alerts capture day trends for ticker SPX. The time frame used is 3 minutes, with buyer-sell annotation, and marking the exact price at time of alert. Let's try to understand the basis of price action captured by our algorithm. You noticed we requested you to primarily use HA candles. You can read more about Heiken Ashi candles on your own. But the biggest advantage of using this candle type is ignoring noise in price action, as it works on averaging concept of price movement within the time frame defined. Unlike regular candles, it is much easier to spot the trend visually. Our proprietary algorithm further reduces the noise by selectively following the trend and only alerting when some very well-defined criteria are met. Hence, compared to different indicators out there which will flip-flop between consecutive candle or candles, our alerts stay true to their course unless violated completely. Now, to completely trusting only the alerts can be bad for your execution. More often than not, breakout of price action always has retrace in opposite direction. Does it mean that our alert is invalid? No, not entirely. It just means that a trend has been spotted, and it is up to a trader to efficiently position themselves. Remember, market is cyclic at any given time. An entry just to catch the next big move can be dangerous, especially with highly volatile high theta tickers like SPX. Next, we will show you with examples how I position my entry and exit for maximizing profits. We will pick one of the real-time sell alerts that was sent out in the server. Now, good thing about market price movement is that it is purely binary. That means either we will go in the direction of alert or we will not. So choice in nutshell becomes yes or no question. As in, you can simply decide whole trade execution based on answer to that yes or no question. We will throw in some more criterions in this particular scenario. More often than not, I wait for following candle to close, and 3 minutes is long time to answer bunch of questions. Let's start narrowing down decision with the questions now. And if answers are falling in place, we will execute the trade. Is price below my critical EMA line for sell alert? Answer is yes, great. Is next candle low lower than alert candle? Answer is no. So we are retracing against our alert call. We better wait and focus is now entirely on second candle after alert candle. While we are waiting, let's define the max risk we will take. We will put that as high of previous candle, which is around 4,130 shown by horizontal line. As soon as we see that price retraced, and a big body candle came to break again in the direction of trend, we will enter. As you can see, we got the entry after first diagonal retrace trend was broken. Immediate drop will yield 5-10% easily. But then price retraced again, and if we were not fast enough, we could be losing also. Now it's perfectly fine to close the trade break-even, or small loss or small profit as soon as you can spot retracement. But important thing is to again create the same set of questions, and same scenario to capture next breakdown of price here. In this case, we see that price almost moves to our 4,130 stop loss, but never closed above it, and this time when trend broke down again, we would re-enter based on same exact set of questions. Is price below my critical EMA line? Answer is yes. Great, let's enter. Might want to move stop loss little up to give more breathing room. So entry and stop are well defined. But how do we exit and where? So personally, my target always is to make trade free. If I am able to take my cost out of my trade, then I can leave without any worry to let it run as deep as I can. Again, this is very personal style of trading, and you can define your own beneficial ways. In this case, my first partial exit will be first arrow where it hits previous low. That would yield easily 20-25% with SPX options if they are closer to money. If price continues to trend lower, meaning every candle low is lower than previous candle. I will wait for price to either stall or close green. In this case, it gives green candle almost 30 points lower. This would be close to 75 to 80% gain on options. Another partial exit and runners are completely free. Now what happens if we miss whole action of first or second diagonal? Again, don't get impatient and let it go. Focus should be entirely finding the next setup to sell. In this case, we do get chances again, highlighted by 3 and again by 4. If you miss the whole trade and whole session, let it go. Because guess what? This thing is happening again tomorrow and day after and day after day after. Cheers! We will look at another alert where price did not retrace after the alert. Remember, price has only 2 options, and unless market closes very next minute, it has to choose one of the options. That is, it will either go in direction of our alert or it will retrace against it. This also reminds me to mention another important point here. I personally never trade immediately at market open or closer to end. Few strong reasons for that. Volatility can be very high, which means I have to act faster than machines to make decisions. This can force best of us to close at loss in panic or book gains way earlier than we should. By eliminating volatility, you reduce risk of making big loss. Now if you are fast at making quick decisions, go ahead and beat the machines. Coming back to trade here. Watch what alert comes. It almost seems that it is too late to even notify us. Price had already broken down for 2 or 3 candles, which is good 10 to 15 minutes late. Have we totally missed it? Well, we will find out. The next candle closes even lower than alert candle. So let's ask those quick questions again. Is price lower than my critical EMA line? Yes, go for it. Let's define the stop. Here it will be around 4,125. And we enter around 4,115. Entry is defined, stop is defined. Let's target our first exit. It happens to be good 20-25 points lower. We have already made good profit and it is time to exit and possibly leave the runners. And again, if you miss the whole trade, guess what, this rectangle breakdown is another 30-point winning trade. With options it would be greater than 100%. Now obviously if I show you nice slides how to win, and leave it there, you will miss the most important trade tactics. And that is how to manage a losing trade. Since we are trying to capture intraday trends, I always refrain from any sort of averaging my positions. I sometimes do add to the strength of positions but never average down. Why this helps? Mainly 2 reasons. It will keep you unbiased for your next trade. And also, you will take hope out of equation. If you are averaging and hoping that trade works your way, then believe when I say this, you have already lost. Rather add hope to winning trade and add fear to losing trade. When you are fearful, you will exit faster. When you are hopeful, you will keep holding it for big loss. As the saying goes, hope dies last. So let's take a look at losing trade. What happened here? We got the sell alert. We got our decisions also in following candle. Is price moving in direction of alert? Is it below critical EMA line? Is it make lower lows than previous candle? Answer all around is yes. So let's enter. Entry is around 4,125. Let's define the stop around 4,129. Next couple candles move in our direction. We might or might not have booked profit, and guess what? Retracement started. Is it faking our trade out? Can it please go back sooner? But wait, why even ask these questions? We have stopped to find few points away. And why not just let price do what it wants? Again, depending on trading style, you might just get out here, which is fine. But I personally hold until my defined stops. In next 10 candles, which is half an hour or even more, this trade has gone nowhere. Finally, it hit my stop. Price closed above my horizontal stop line. And it did not work. Let's take a loss. Close 5 points on SPX, that would be 10 to 15% lost. Big lesson here is that no 2 scenarios repeat, and we always have to enter based on probability of gain in our trade, with maximum loss defined. Maybe next 3 or 4 consecutive trades do same if market is just chopping around our EMA line. But does that mean decision criteria needs to change? Nope. It just means that we need to avoid sideways market and just wait until next real breakout or breakdowns happen. Since market is cyclic, we know that next opportunity is close. We just managed to get out of hope trade and geared ourselves to move in either direction, long or short. The whole idea is that when we are consistent in our process, the gains will outweigh far greater than losses. If your losses are outweighing gains, then you must question your decisions matrix and process and finally fix the flaws. process remains same on the other side too. Questions are just flipped based on the direction. Are we above critical EM line? Are we continuing the price in direction of trend? Are we retracing immediately after the alert? Has price been chopping for a while? Is this breakout from choppiness? You can see same three scenarios repeating, where we can book big gains and manage small loss when trade does not work. At the end of the day, believe us, this algo works great. In fact, any process can work if you are methodical around it. Our bot has great capabilities predicting trend accurately. Obviously, there is no way for any technical bot to predict how an event will unfold. So never try predicting either. We always request you to avoid trading pre-event on the day. Even if some alert comes, post-event, prices will settle down, and same cycles will start repeating. Our whole idea of us providing you with these complementary bot indicators is to enable you to execute great trades without any fear or even from guidance. If you keep following the price movement with alerts, very soon you would realize that you can make your own decisions, which could very well turn out far superior than what is being demonstrated here. Absolutely no one ever catches the exact top and bottom, and we are not even striving for it. What we aim is to make consistent, profitable trades day after day and accumulate over time. All the best. Finally, go to pinned messages in our regular trade discussions channel. You will find a lot of useful information. Also, shown here is how majority of days unfold. And every day we can find these breakouts or breakdowns if we are patient. All the best in executing your next winning trade.